I think we were all left wondering, how in the world are these commission-free trades going to be affecting these brokers? That's a very boring and bland introduction to the video, but the video, it's going to be a lot of numbers. It's going to be boring. You already know it. So we're going to go into the three brokers that, the big three, as I would say, Charles Schwab, Etrade, and TD Ameritrade. We'll see exactly what's going on with them and how the business is going to change in the future due to the fact that they are no longer making money off of commissions from trades. So we'll see how that goes. We'll go through every single company's earnings. So overall, Schwab's revenue grew 5% to $2.7 billion. That's right. And they beat on an EPS standard by 10 cents compared to consensus. 74 cents versus 64 cents per share. Pretty nice. Pre-tax margin dropped actually a little bit, around 1.5%. Not anything too significant. Net interest revenue increased. Overall, they saw a growth in asset management and administrative fees. You know, that's a little rough. Trading revenue decreased, and record high for new client assets bought. Interesting. Gotta love it, love it. And year-to-date total of $1.45 billion, 6% annualized growth. Pretty nice, right? Pretty nice. That's what I'm saying. So overall, it was a very good earnings report for Charles Schwab, and you can really see the 5% growth here. That means 9 months ending now. You'll see they should end up doing around $11 billion in revenue this year. So far, it's a 9% change year over year. Look at that compared to last year. So that is very good growth for them. And I mean, overall, still there is a growth in profit margin as opposed to the previous 2018 through Q3. There is still a growth here. As you can see, 46% versus 45%. So pretty similar amount, but you know, nothing too significant. So we want to really see how those commissions are going to affect this company in the future, right? That's kind of the main thing. So we're going to skip past that nonsense. And we're really concerned with trading revenues here. So if we're looking at trading revenues, which is their way of saying commissions for Charles Schwab at least, they look like they're going to go ahead and for a full year do somewhere, I'll say around $700 million in revenue from commissions, right? Which overall is not insane. But then again, $700 million in a year, it's kind of a significant drop off, if you know what I mean. I mean, if you're thinking about it, if the company's doing $11 billion, you're taking off around $1 billion of that. It's a pretty stark decrease when you get rid of commissions there. So it will be interesting to see if they counteract that. I wasn't able to find any guidance that they released for the next quarter yet. I don't know. I think they're probably gonna maybe wait and do full fiscal year guidance maybe, because I haven't seen them release anything. And this was reported last week, so I've been waiting on it, but I haven't seen any sort of guidance for them yet. So we'll see how that if they plan to counteract it in some other way. I don't think there really is a way to counteract that. I mean, you can't really counteract a decrease in an entire segment of your business. It's really not possible with a company like theirs, unless they were offering some other service. And again, I did want to point out, as with all these companies, if you think about it, the company that really started this and pressured them to do this, Robinhood, they get a lot of money off of their Robinhood Gold service. And again, I mean, service is the name of the game nowadays. So there's a decent chance that these companies decide that they want to start one of these services, whether it be increased borrowing rates, they could really offer anything. Better advice on trades. They could have, deals with some investment brokers or some analysts, and get that information beforehand if you pay monthly for this. Again, I think there's many ways that they could do it. And I think that they probably will in the future to try to counteract any loss. But we'll see how the full year goes. Obviously, we want to see a full year worth of impact from this and see how it goes. But for my estimations, it's probably going to be somewhere from, I would say, $700 million is what we're looking at. Another very noteworthy thing, which I just wanted to point out just because we're talking about him, Charles Schwab allowing fractional shares, which is crazy. Crazy. This is obviously a push to try to get younger investors in, and you can tell it. A lot of younger investors don't necessarily have the money to buy a $2,000 Amazon share. You know what I mean? So they buy fractional shares. They can't afford a $180, $190 Facebook share. So what are they going to do? They're going to offer fractional, and that's pretty fantastic, honestly. I think that's good, not only because it gets younger investors in the game, but it also gets them in the game with a higher tier broker. I hate to say there are companies that aren't necessarily higher tier brokers, but there certainly are. Certainly are ones that aren't as well established as a Charles Schwab might be. So I think it's pretty exciting, and we'll see who follows them on this, and I hope they certainly do. I guarantee they will. Every other main broker probably will offer fractional as well. Robinhood doesn't offer fractional, though. The company they copied off of for the commissions free is offering no fractionals, but they start offering fractionals. So we'll see if Robinhood then follows suit after that too. Even I certainly think they could. Let's go ahead and talk about Etrade now. You know what? Let's switch it up. Let's go to the most recent one, TD Ameritrade. That's right, TD Ameritrade. I did find guidance for TD Ameritrade because they gave the full fiscal year guidance as opposed to quarter guidance. Because this was TD Ameritrade's Q4. So a very good earnings report for them. $1.05 per share exceeds expectations of 97 cents per share. Nearly a 10-cent beat again. Really love it. Their fiscal year 2020 guidance, that's right, is anywhere from $4.9 billion to $5.3 billion. All right, that's not bad. Consensus was $4.95 billion. But then you got a question, well, how does that stack up with, you know what I mean? How does that stack up with everyone else? What is their total revenue? Well, we'll take a look. What's their total revenue? We'll see how it stacks up. So, for the quarter, you'll see a revenue of $1.6 billion, right? Okay, not awful. And obviously, there's non-GAAP EPS of $1.05, and decrease in new client assets, but an overall increase in total client assets year over year. Pretty interesting. Let's see. Full fiscal year 2019, up 24% year over year in terms of non-GAAP diluted EPS. Love it, love it, love it. And also average client trades per day increased as well, 6% year over year. Obviously a good sign for them. But here's this net revenue line that I want to pick at. $6 billion flat in net revenue. And they're calling for guidance of around, let's say, a consensus of $5.15 billion. So they're calling for a decrease in revenue off commissions around, right, you're talking around $850 million that they're saying they're going to be missing out in commissions fees now, which, shoot, that's pretty rough. I mean, you're going to be missing a sixth of your business almost going down the turlet. How are they going to counteract it, right? I think there is certainly a way they can counteract it. I mean, you can see from they're still growing in terms of trades, which is pretty interesting. Overall, you see the trends here. Obviously, it was a very good quarter for them, or very good year for them in terms of trades. Very good Q1, obviously. That's where you saw a lot of that growth. Total client assets, again, Q1, not good in that, but trades were up, and that was a lot because, I mean, if you look at quarter one of the year, there's a lot of volatility, and that's why trades were up. I mean, so this guidance calling for a decrease in around 1 billion, you take it as you want, I guess. You take it as you want, but we'll see. Obviously, a very good effective tax rate here. And they really care about positive operating leverages, strong pre-tax margins, which, hey, I think they do have that, and EPS growth, and significant capital return. Okay. I mean, if you look at this historic net revenues, good increase, but again, we're going to take it back a year pretty much because that decrease in the inability, I would say, inability to have those commission fees. So my mind's blanking on me today. What's going on here? But again, if we're talking about the significant capital return, again, just one more point on TD. They increased their dividend to 31 cents per share, which you already know it. That's why I bought them. Boom, boom, boom. But overall, I've made a good, I mean, this is good 14%, 15% return now, already off TD Ameritrade. So I'm very excited about that, and I'm very happy. And I'm sure we see similar numbers from Charles Schwab too, and the other brokers that really took a hit. But still, I like it because it was mine first. Not really. But again, that's really it for TD Ameritrade here. Pretty significant decrease here we're going to see. Now we're going to go on to Etrade, like I teased before. Exceeds analyst expectations by 2 cents per share in EPS. Compares to 90 cents in Q2 and $1 from a year ago. So slight increase in earnings per share. Total net revenues of 767 billion, 267 trades per day, 267,000 trades per day, that is, which is down quarter over quarter, but up 5% year over year. Average commission per trade of $7.18, which obviously you're going to take a hit on. You're not going to have that anymore. So we'll see. We'll see how that stacks up in terms of totals here. Just gonna scroll up here. We're gonna look at some important noteworthy points here. I mean, I should mention, and I'm a guy who cares about his cash. So after 9 months, they've somehow managed to lose $1.5 billion, a little bit over $1.5 billion in cash. It's noteworthy to mention. I'm a very cash-focused guy. So overall, I don't like seeing a decrease in $1.5 billion in assets, but it's what happened. I mean, it's okay, right? There's probably justification for it. So just something to consider because they're going to be losing revenue now regardless. So total revenues here, 521 million. That's 3 months ending. Pretty interesting. Let's go to the top. This is what we really care about. Net income of 270 billion. Gotta love it. Total net revenue of 767 milo. Right? Gotta love it. Operating margin of 50%, which is very good. Very good operating margin. But we really obviously like to see this total net revenue, company record for them in revenue. But again, we're gonna see a decrease now. So we're gonna go down here and look at look at the money they make from commissions, and if you see here, just off the 3 month end here, they made 122 million in revenue from commissions, but on a 9-month standard, well, you know what? It was 365 million. So if we're looking full fiscal year, if they completely eliminate commissions, we're gonna see a decrease. I would say around $500 million in terms of commission fees. So it's rough. I mean, I hate to say that it's rough. I mean, it definitely is. But so E-Trade's going to be seeing a decrease in $500 million per year in revenue, which, it's a pretty significant impact to their business. How investors react is not mine to determine. It's not my determination here. We'll see how things go, but that's a snapshot of what things are going to be like. E-Trade hasn't made any special announcements since their earnings, but it was still a good earnings report. I'm waiting. Obviously, we'll have to wait until next quarter to see the full guidance that they give out. But overall, from a investor's perspective, there is some concerns. Obviously, a very big decrease in net cash flow, and also a decrease in revenue. That you're gonna see about 500 million in a year. How are they gonna counteract it? It's the question we have for all people. Again, my opinion is they're gonna start some sort of service where they offer free or analyst opinions, up to date, very quick news, something like that. There's got to be something that they can offer. Better margin trade rates. We'll see how it goes. That's all I really have for you today. I hope I didn't jumble too much here. Obviously, we have to wait and see what Fidelity has, see what they're going to be losing. But these are just the big three I wanted to point out. I think there should be a pretty big impact on business, but I'm interested to see how things go.